But we turn now to tech and the latest tech trade in light of Google's earnings yesterday evening. If you check shares of Google right now, we're seeing it down about 3%. They reported slower second quarter sales growth. Some concern continues there about the ad market. But is the challenge for Google now going to be finding their own new drivers of growth? The search engine sort of searching for help themselves. So for more on Google and to preview what to expect next week out of Yahoo and out of Apple, Paul Meeks is joining us. He's from Winsor Asset Management in Mount Pleasant, South Carolina. Before joining Winsor, Paul started and built Merrill Lynch's $7 billion global assets technology mutual funds franchise. So that's why we consider him an expert here on this program. Paul, taking a look at Google and at IBM, which would you rather buy right now?
I'd probably buy IBM, even though I admire both companies. I think Google at 19 times earnings is a bit expensive for its growth profile going forward, where even though IBM is up somewhat today at 12 times earnings, I'm still a buyer of IBM. I think IBM over the next year or so can go up about 15–20% from here. So it's not a screaming buy in my view, but I think it's reasonable, particularly when you add in the dividend yield.
Tech has gotten a lot of attention, really supported the market in many ways, a lot of money flowing into that sector. Do you think that the tech trade at this point is overdone, or going into earnings week with Yahoo, with Apple, are you seeing opportunities to continue to buy right now?
I think there are some opportunities. Typically, they're smaller, less covered stocks where analysts can really get an edge. Most of the companies that are the household names, like some of the ones that you've mentioned, I think the move that they've had since the market troughed on March 9th of 2009, probably too far, too fast, and so I would not buy in any type of a blanket way the technology sector.
No. And Yahoo and Apple, what are you expecting out of them next week?
Yahoo I'm always a little bit cautious about because the company's in the midst of a transition, though I think it's much, much better managed under Carol Bartz, and the company does have a chance to progress from here. I don't think really the franchise is even worth where the stock is trading. Apple, on the other hand, I think is a strong buy for the long term. Probably wouldn't buy it ahead of announcement. I think what happens, I know this sounds like a very nasty thing to say. If anything ever happens with the health of Steve Jobs, the stock will go down. At that time, you buy it with both hands, because I believe all this uproar about his health, is he going to come back, is he not going to come back, is over-exaggerated. The company is very well run by Tim Cook, and remember, there are thousands of employees there, not just one man running that company.
You mentioned there Carol Bartz is the new CEO over at Yahoo, but in the management space over at Apple, Steve Jobs, there have been reports that he is indeed back in the office these days. He is part-time. I mean, is the story for Apple going to continue to be innovation if we're talking about new management there with Tim Cook, or is it going to be, what is happening on the broader tech environment?
Well, obviously, the company is tied to the consumer and consumer electronics specifically, so they have a great reputation of being innovative. They'll continue to lead, in my view, the wireless handheld sector. They're making some gains in their PC business, though their PC product is a lot higher price point than you can get with a Wintel platform, so that's a little bit of a problem in this environment. But the whole PC market is migrating not from desktops to notebooks, but notebooks to the very small, very cheap netbooks. And over time, if Apple can come out with an attractive price point, people want to buy their products.
Well, you're not confident about the U.S. consumer, but there were sort of hopeful comments out of Intel earlier in the week that in Asia, demand was potentially going to continue to grow for chips, for computers on a global basis. That doesn't change your forecast?
Well, I think that a lot of the talk, and I know you had a guest on earlier today talking about a turn, and particularly in the U.S., the recession being behind us. I don't know if I necessarily agree with that. I think what's happened when you take a look at the markets, either economically or the financial markets, is that Okay, so maybe the recession is behind us, but what happens if we go into multi-years of 1 or 2% GDP growth? That's also better than it has been, but pretty unattractive.
All right, Paul Meeks, principal at Winsor Asset Management. He currently has a hold on Google.